Stocks are set to enter the last week of June near record highs. This is the longest stretch for the S&P 500 without a one-day drop of 2% or more since the financial crisis. Joining us right now to talk markets is Sylvia Jablonski. She's the CEO and CIO of Defiance ETFs. And Sylvia, on top of the numbers that we just mentioned, you are looking at 8 weeks out of 9 that the S&P 500 and the NASDAQ are higher. Dow's been on a winning streak lately, too. Is that the type of thing that makes you think, great, it's time to jump in? Or as you get longer in the tooth with these long runs, does it make you nervous?
Good morning, Becky. And it's a great question. 31 all-time highs that we've seen this year in the S&P 500. NASDAQ's been rallying. Yes, we're at all-time highs in a lot of stocks. We're, seeing the Mag 7 run and things like this. So I wouldn't necessarily, be itching to jump in today, but I do think that we're seeing some pullbacks in the Mag 7. And then I do think that that poses some opportunities for investors. So for example, NVIDIA, the beloved stock of the year, is down about 6% since the 18th. It looks like it's down a little bit pre-market. That's a name where if you've had some FOMO, you might kind of jump back into the market, even given its stellar run.
Outside of just the Magnificent Seven, though, do you think that there are other places? We've had a lot of talk about the rest of the market catching up. Are they doing that?
Yeah, and I think that's one of the issues, and I think that's what will need to change if we continue to see the market rally into year end. We'll have to see that, that divergence of breadth in the market. It's just kind of been sitting in the Mag 7. So I do like other areas of the market. You talked about in the last segment some of the weight loss drugs. I think that that's a spot to look. You look at companies like Lilly. I mean, they're just having an epic run because of this cultural shift in using these various weight loss drugs for different diseases. I also think that AI is going to benefit that sector and kind of make things more usable, more efficient, and you'll get some tailwinds there. And then when you think about AI, it takes a lot of energy to power the AI phenomenon. So things like uranium, nuclear energy, copper, you're going to have to power this massive amount of data processing, data usage, data centers, and things like that in order for this to continue going forward the way that the companies are suspecting it will. So I'll look at things like uranium and copper. I'll look at 5G that has, kind of lower latency for communication, the staples that will feed AI.
I know you mentioned that the software companies are on sale. Interesting. We've seen Salesforce pullback,
Yeah.
Adobe pullback. But is that an opportunity to buy, or is there a reason that we've seen this pullback?
I think there's a reason that we've seen the pullback, and the reason is that they haven't embraced the full scale of and scope of what is AI. Having been a user of a lot of these software platforms, particularly Salesforce, I just don't think they're there yet. But what I think that will happen is that they'll start to harness AI, and it will be usable for companies to, whether it's to find clients, whether it's to optimize sales and things like this. Once they get there, I think given the pullback, they're names that I want to be focused on. So I think it's a longer term play, but it's an area of the market that's been beat up, and it's an area of the market that hasn't, come to fruition in terms of its AI greatness.
I don't know. Adobe's been pretty strong with their AI offerings. Also, the idea that they're not stealing content from everybody else to teach their language model on.
Yeah, so Adobe, agreed with you on Adobe. I think I'm looking more at Salesforce in this particular situation. So Salesforce, I think, is a software that is used by, every major bank and financial institution, furniture companies, things like this. And I just don't think that their AI works that well, for lack of better words. And I think that when they harness that power fully, it's going to benefit the stock price there.
Sylvia, what do you think about the concerns in the EU looking at the big tech companies? We focused on how they're looking into Apple at this point, but the idea that you could come up with a fine that's 10% of global revenue, not global earnings, not earnings within even the EU. To come up with fines like that, you are talking about tens and tens and tens of billions of dollars. How big of a risk is that? And generally, we think of China as being a big risk, but what if the EU is just as big, if not bigger, a risk?
Yeah, that's a great point. I think that we think about China as our main, kind of risk factor when it comes to tech companies. And here we see this fine for Apple. I think that, these tech companies are going to have to find a way to work with regulators. They're going to have to work within the parameters of the rules and kind of, shift and readjust. And that could lead to potential losses, if they actually end up getting hit with these fines, and if they, do have to kind of separate different parts of their businesses. So it's certainly a risk out there. I don't think that it necessarily affects all of the Mag 7, but I do think that it'll impact companies like Apple. We'll have to look and see what happens with Meta and content and things like this. So it's certainly something for investors to be aware of.